Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about the amount of people that believe interest rates are going to skyrocket during 2025. It's a surprisingly high number. In this video, I'm going to talk about who believes rates are going to go up, why they believe rates are going to go up, and what is that based off? Is it based off any fact, and is it likely that that will happen? If you're new around here and you haven't done already, I'd love to ask you to subscribe to the channel over there and hit the bell notification. We've got new property content every single day. We talk house prices, we talk interest rates, we talk property investing and much, much more. And let's get some more views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to that like button. That massively helps with the YouTube algorithm. And that really helps the channel grow. So I appreciate everyone that does that. So what's going on? Well, this is an uncertain market at the moment. In fact, it doesn't make logical sense that during the pandemic, house prices went up so much. Think about it. Businesses were shut down. There was uncertainty and we had a dip at the beginning. But then since then, house prices have been really strong. The last year or so, that's not been the case. Things have slowed down, and in real terms, house prices are actually down if you adjust for inflation. Now, we've got a lot of uncertainty in the world at the moment. Now, it's not all Donald Trump's fault. We've got the tariffs and the global trade war that are causing havoc with the stock market, and import-export is uncertain at the moment, and that's going to impact British jobs for sure. But even before that happened, we had really high energy costs, 4 times higher than anywhere else in the world. We had the minimum wage that went up. We had national insurance that went up. We had business rates that went up. And it was really difficult for a lot of people. And so because of that uncertainty, it meant that potentially house prices could have dropped this year. So far, they've remained fairly strong. But that's because the stamp duty holiday. And so the first quarter was really busy. In fact, we got half a year's property sales in the first 3 months. And that was because people were getting transactions done, either because they wanted to save on stamp duty or someone in their chain wanted to do that as well. So we've got all this uncertainty. We've got the UK on the verge of a recession. And so because of that, what would normally happen is interest rates would start to drop. But we've got the extra worry that inflation is coming roaring back. And so that's being talked about a lot by the Bank of England. We're at 2.5% inflation at the moment. But are we going to go up to 3.7% like their forecasts have said? So how many people, because of that, are starting to worry that interest rates are going to go up? Well, a third of people believe that interest rates will continue to increase this year. That's very, very important. A third of people believe that will happen. But it gets worse. First-time buyers are even more pessimistic of this. And so first-time buyers, they expect 49% of them think that interest rates are going to increase this year. Now, what's that based off? A few things. First off is jobs. So they feel that unemployment is going to rise and that's going to cause interest rates to go up. So I'm going to touch on what will happen there. Next is the economy. And so the economy isn't looking great. You can see the news, the newspapers, or anywhere online, and it's really not looking great. And the expectations are that we will hit some sort of point where we will go into a recession. And the next one thing is most people feel that inflation is going to come roaring back and that the Bank of England is right and it's going to go nearly back to 4% by the end of the year. So let's cover those things and see if these people's expectations are right. Jobs. So unemployment's expected to rise. If that happens, it means the economy isn't very strong. That normally would be countered with the Bank of England cutting interest rates. Now, the chances are that jobs are going to suffer. You've got massive companies like Jaguar Land Rover that aren't exporting any cars to America at all at the moment. They've just put that on hold. So that's important. The economy is also faltering. The IMF have said that the British economy isn't looking that strong, and it could go into a recession in 2025. Now, again, if that happened, rather than interest rates going up, your expectation would be that interest rates would go down. Normally, if you go into recession, the Bank of England would actually cut rates. So first-time buyers here thinking rates would go up because of the economy or jobs, that's not normally what would happen. Now, the next one is inflation. And how we've countered inflation so far is whacking the interest rates up at an alarming rate. It was faster than ever before. We had so many back-to-back interest rate increases, and that is potentially what people think would happen again. But the Bank of England have said initially that inflation is their number one priority. Now, if you listen to their interviews more recently, like I do, then you'll hear from them saying that they think that the actual problem now is also unemployment. So they're now saying that they've got two priorities: to keep maximum employment and to drive inflation down. Now, where the interest rates currently sit is still what they call restrictive. It's causing pain for people. It's slowing down spending. So I don't personally think that the 49% of first-time buyers and the third of people watching this, and some of you that watch this content as well, because you talk about it in the comments, I myself can't see that the Bank of England would increase rates at all. In fact, if they were considering increasing interest rates, I don't think that they would be cutting on the 8th of May. And right now, the markets indicate with 100% certainty that the Bank of England will cut rates on the 8th of May. In fact, Andrew Bailey and the Bank of England have been talking about that in interviews, at least hinting and suggesting that's what we've got coming in May. So look, interest rates could rise, and it's always better to protect yourself. So if you've got a rate that expires in the next 6 months, then you have the probability of that rate going up is there. There is a chance, but I don't think it's very, very high. I don't think the probability is very high. But what you should do is secure a rate as soon as you can. Then, if rates do go up, you're protected. So what I'm saying is, if you've got a rate that goes back to be negotiated in the next 6 months, get that agreed as early as you can. Then in that 6-month window, when you're waiting for that new rate to start, if rates go up, you'll have secured the best rate. But if they go down, you can go back to the lender before you start that, and you will be able to swap onto a better rate. That's the best advice. But I want to know, what do you think? A third of people believe that interest rates are going to go up this year. 49% of first-time buyers believe interest rates are going up this year. I'm saying they're not going to, but I could be wrong. What do you think? Let me know in the comments. Do you think interest rates are going to drop this year? Do let me know. Do smash like, do subscribe, and also check out all the other content on this channel. We've got more than 1,000 videos now. Maybe start with this one right here.